From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go.
Alrighty, folks, we are going to start this conversation about situational awareness, but it really is about Ken Griffin. We're also going to talk about Japan intervention, the potential thematic unwind that some are warning about, and we will close with what I call the question of the year. You got to stay tuned for that because I'm going to call something that has never happened before, and we're going to see how crazy Taylor thinks I am.
Yeah, because I have no idea what's coming here. You wouldn't divulge it, so let's do this.
Wouldn't do it. Well, let's start with situational awareness. It was very much all over the news Thursday and Friday. Lots of people breaking down the timeline of this 24-year-old supposed savant. You know, one might say he just got lucky and ran a hot hand like playing blackjack at the casino. But I think the story is actually just about how cutthroat Wall Street is. And I think Ken Griffin pulled off a maestro of a move and likely has already added tens, if not $20 billion to Citadel's coffers because he took out this kid. So want to break that down for us, what you saw?
This is one of the most savage moves I've ever seen. There is no free lunch on Wall Street, and leverage is something that can be employed at times well, but when it goes bad, it just goes so darn bad. And I think Ken was literally pulling strings behind the scene that was just impressive or market manipulating or whatever. So here's kind of the landscape. So you've got this Leopold Aschenbrenner, who is this savant in the AI space. He launches, let's back up at 1 second. He graduates from Columbia University, valedictorian at 19 years old. And then he goes on to be instrumental at ChatGPT, OpenAI, and then spins out. He gets fired, and he got fired because he basically was a whistleblower saying that, hey, this is going to start hacking into underlying companies, and the world isn't ready for it yet. Talking about the power and the amplitude of what AI could do. And he was just the ultimate believer in it. He looked like an absolute investing genius. He started out with $200 billion. I'm sorry, $200 million.
Million.
Yeah. $200 million. So really not very big in the grand scheme of things.
Yeah. On a Wall Street level, that's not very much.
It's nothing, right? And so, but he had some prominent backers. But anyway, so he starts investing this money and he gets hyper concentrated in chips, semiconductor chips, and then also memory surrounding the AI trade. And so what happens is that was late 2024. Those trades start to take off.
Let me stop you right there because I think it's even bigger than that, at least what I have read, but you're on Wall Street, so tell me what I've read is just incorrect. So not only was he levered on hardware, memory, to the tune of 4x or what they call 4 turns, but he had an opposite trade on software the downside.
He did.
And that was levered 2 to 2.5 times. So he had this pair trade that basically said, you know, the picks and shovels of AI are going to go higher and, you know, legacy software was going to collapse.
Correct.
And frankly, that theme was on point.
He was spot on.
For a little while.
For a little while. And you know what? Like long term, and we'll get to what happened, but long term, this could have continued to play out incredibly well for him.
It could have.
So he takes $200 million and turns into $45 billion. Now there was new inflow of capital coming in that obviously got him there, but nonetheless, the returns were absolutely astounding. He was right on the picks and shovels, and he was right on the software demise on the other end of it, that AI would just take over and you wouldn't need Salesforce, et cetera. And then what happened was you obviously had this just euphoric blow off top that took place in those underlying assets. And so the assets start to pull back. And when anything goes euphoric, the drawdown is so dramatic. And so in the past month, specifically the memory stocks are down 40%. And so Ken Griffin starts to look around the industry and he's like, okay, who's highly leveraged?
I want to stop because again, you know all of this, but the audience might. So again, if your bullish bet is levered 4x and one of those trades falls 20%, what you're supposed to do is you take that 20% times the turns or 4, which equals 80%.
Correct.
Yeah. You know, it feels beautiful on the upside, but it feels nasty on the downside.
Yeah. And so you're spot on. So what starts to play out there is Ken starts to look around. Ken is this massive Wall Street veteran, known savage, to do whatever he needs to do to make money as he's supposed to. And he starts looking around and goes, where's the leverage? Who's swimming with their pants down right now, to use a Warren Buffett analogy? And he goes, look at this 24-year-old. I'm going to put him directly in my crosshairs. And so he knows that he's getting close to massive margin calls that he's not going to be able to afford. So then Ken goes, what's going on this week? And now we're talking about last week. What's the biggest
this all happened this is like Monday, Tuesday. He's having these conversations.
Correct. And so what he goes is, okay, well, we got a Federal Reserve decision coming on Wednesday.
Yeah.
And right now there's this real outside chance of about 20% that the Fed rate hikes. And he goes, you know what? Whether I think this or not, doesn't matter whatsoever. We're going to put out a headline that Citadel and all the prowess that comes behind that name thinks there's going to be a surprise rate hike. And
I remember, dude, let's put this in real time.
You texted me this. You texted me this. And you're like, what is going on here? And I'm like,
what the hell?
I'm like, and at the time I couldn't put the pieces together. I'm going, there's no chance that he thinks that a rate hike is actually coming. Because when you look back last week, if they hiked rates, they would have looked foolish for not having hiked rates the month before, because the data had actually gotten marginally better. Correct. So there was no way that you could walk yourself into a corner to say, yeah, logically they're going to, interest rate hikes here. It just couldn't happen. And so, but anyway, Ken doesn't give a damn about that. Yeah. He's like, I got money on the line here and I know I can squeeze this little dink. And so he goes, all right, we're going to put out a note that we think a surprise rate hike is coming. Yeah. And the day that gets published, the memory chips sell off, or memory stocks sell off 14%
in a day.
And so times four. So what is that? 56%? Yeah.
Yes. Exactly.
14 times 4 is 15 or 56%. So all of a sudden the margin calls are there. They can't afford.
It's not even more. I mean, because again, when you think about being a levered player, as I kind of talked to somebody in the charts over the weekend, you could see Leopold selling, like he was selling himself Monday. Mm-hmm. Then Tuesday, Wednesday, he got some calls. And then by Thursday, it was forced selling.
Correct.
He wasn't even involved. It was
correct. Correct. And the great thing about Citadel on the other side, well, I'm not sure that's the right word, but the thing about Citadel on the other side was it needed to be a big player to take over that position.
There was 5 people that could have said yes.
Correct. And it had to be someone that wanted the trade to be long in those underlying names. Yeah. And so, but that caused a full market cascade.
Oh,
because when you got 45,
Thursday was ugly.
When you got 45 billion on the outs, you've got to now have this situation where they're forced selling. That's causing forced selling in other places. And it's this cascading effect, banging downwards. And then boom, the bottom hits. Citadel swipes the assets over onto their balance sheet. And that day.
And again, I want to be clear. Not only did they swipe the assets onto their balance sheet, but they did not do that at market price. They got a discount.
100%. 100%. And then bang. Memory
Friday up 20%.
14% that day. It's like, this is
savage.
I mean, the brain behind that put those underlying stars together, because I really don't think that move can be justified with anything else besides for Ken Griffin looking around and going, this person's leveraged to the gills. He's seen as a savant. Other people followed him into the trade, are leveraged in the same direction he is. When he unwinds, others are going to unwind. It's going to cascade downwards, and I can strangle him.
Yeah. So rumor has it that Situational Awareness has 0 public book. There are reports that he's still got 10 billion or some number. But I believe all of that is just one of the AI companies
Anthropic.
Thank you. Drew a blank.
Yep.
So again, he's out, and he did put out a note saying, "Hey, blah blah blah. I won't use leverage again." This is.
Well, do you know what that poor bastard was doing this weekend?
He got married.
Oh my God, are you kidding me? Could you imagine? Your career is just absolutely crumbling around.
Dude, does he even care though? He's 24. He's a baby.
And you know what? Like, this is so stereotypical or whatever, but like, if you look at a picture of him, you're like, oh, yep, that's him That's him.
No, exactly. It's exactly who you would think. It's funny. I get like supervillain vibes from him. That's what I get.
You get Sam Bankman. By the
I do.
way,
SBF,
he worked for SBF, Sam Bankman-Fried,
he did.
for a period of time. I think hysterically on some charitable endeavor that was
they're connected.
They're connected, right? And so, it's
what's real funny about SBF? If you really just step back and look at him as a trader or investor, he's one of the best ever.
Same thing.
He's made some great calls.
But this is literally the best lesson that anybody could ever see on leverage. It doesn't matter whether you're right. You've got to be able to stay in the trade.
Exactly.
And Wall Street's savage. Like in the video that I put out today, I'm like, if Wall Street sees you doing that, they can move the market to force you out of that trade. And that's exactly what took place here. He was right. He's still right. Those chips and those semiconductors.
And it doesn't matter.
Doesn't matter.
Doesn't matter. He sold at a discount, and by Friday, Citadel was probably up 20 billion. It's just savage.
And that's why, incredible. The storyline there, they should do a movie on that.
That was my next question. Do you think a movie is coming? I think a movie is coming. Yeah. Well, let's talk about this thematic unwind, because Goldman Sachs over the weekend, because this is all over the news, put out a warning that there might be up to 185 billion in additional forced selling from thematic or trend funds. Again, Leopold is not the only one. He may have been the most public and certainly the first one to get shot. But there may be some more pain coming. What do you think?
It's just not normal to see in the markets the largest companies in the world bang up and down 10 to 15%. Like literally last week, what did we see? Microsoft up 15, Apple down 10, Meta down 15, Google up 8.
7, 8.
Yeah. Like that's not a normal market. The market is really trying to find a direction right now. They're trying to figure out, is this AI trade something that we want to perpetuate ourselves through? Is it going to play out? Are we going to pay the hyperscaler side of it? Because we know outside of the hyperscaling, they have profitable businesses that at least can be a backstop for this. Do we want to continue to bet on hyperscalers are going to continue to build, and therefore we're going to continue to buy the picks and shovels around it? Are we going to have this outside sideswipe of Kimi 3 and stuff coming out of China that's a fraction of the cost? There is a lot of swirling winds around the number one thing that's driving the entirety of the market right now, and that's AI. And it's getting called into question. And all of these thematics are either one time directionally in favor of AI or 2 to 3 times because they're leveraged as well.
Yeah. Again, folks, there's a lot of people, I think you said it earlier incorrectly, Taylor. There's a lot of people seeing what Leopold did and having wild success, right? 200 million to 45 billion in a 24-month period is unheard of, even on Wall Street. Obviously now we know there was a theme behind it, but yeah, I think there's more pain, because when I step back, I'm not a Wall Street veteran like you. I actually think the first cockroach was South Korea. Leopold is the second one. And if you know anything about cockroaches, there are very rarely two.
You turn on the lights when you can find the switch and they scatter in all directions. Yeah. I mean, what Leopold experienced is exactly what happened in South Korea. I think I heard over the weekend that at that juncture, there was 350,000 accounts liquidated, and they thought that by Monday, to zero. Right. Yes. Where they said, okay, thank you for investing. You now have no money. And so I think by the end of the weekend that this was, maybe it was the All In podcast or something, that it might be 1 to 1.3 million accounts fully liquidated.
Yeah. So I have data on that because again, I've been researching this, and I do think South Korea was the first quake. So about 2 weeks ago, maybe it was 3 weeks ago, after one of their companies went public, HK Hynix or whatever it was, they had one drawdown at that point. And this was the data from the All In podcast. 350,000 accounts went to zero, some negative, but 1.3 got margin called. What they were talking about the All In podcast is that data is 3 weeks old. So now they're expecting probably over 1 million accounts got called to zero. But in South Korea, what happened last week is the government stepped in and says, hey, we're going to support this. And I don't know. It's just wild.
This is an area where I think that supporting the market is not something that should be done by any government at this juncture, because
No.
what you're doing is you're saying now, like, okay, literally you went to Vegas. Like, that's what
Yeah.
people are doing when they're leveraged in these trades. You're
Yep.
in Vegas.
Yeah,
And
you pulled the
so
slot machine, you won a couple times, and you're upset that you lost on the next one?
we'll let you have all the fruits of your labor that when it goes
Yep.
up, but there's no retribution on the other side. And what you
I
do
hate
is you
that.
just perpetuate bad behavior there.
Correct.
And it's not to say that, like, there aren't things that happen. You know, if a bank goes down and you've got over 250 grand in
Yeah.
cash in it, like, I have no problem with the government backstopping that.
Yeah.
That's you aren't risk, at
Yeah,
least you're not
you weren't reading their balance sheet. Yeah.
correct. And that's not your fault necessarily at the end of the day. Should you have it? No, but at the end of the day, you're not going out there trying to gamble it, which is what's
Yeah.
going on. And then you just create this perpetuating bad behavior, which is, I don't see that as productive for anyone.
Yeah.
The whole evolution of the world is again, now I'm in a rabbit hole of religion and stuff like that. That's not the point of this, but at the strong survive, right? And so you need to have those traits passed on of the strengths and lessons learned along the way.
My audience knows my story. I was one of those geniuses last time that turned 7 grand into 200 and actually said out loud, I'm smarter than Warren Buffett. And then Mr. Market cleaned my clock to the tune of 80%. So I have been there on a much less zeros, but I know exactly how that feels.
Yeah,
And
ask Davey Day Trader. Remember talking about him?
Yeah.
Portnoy?
Yeah, Portnoy. Yeah.
Who is this Warren Buffett schmuck? God.
I remember that. I was like, oh my God, you're going to
We were both laughing at the time. We're like, this is going to blow up. This is going to blow up.
Yeah.
And it did.
Portnoy. Crazy. All right. Well, let's talk about Japan intervention. The Japanese government has long had currency controls in Japan. They kind of dumped them earlier last year, I believe. But something, I don't know, I think for the first time, correct me if I'm wrong, but it looks like the U.S. has stepped in to the tune of $5 to $10 billion to also support the yen. What the heck is going on? Is the yen carry trade just destined to blow up?
It seems like it is, but it can't come as a surprise. Like we've been down this line before. It did blow us up. It was almost, you know what? I think it was August 6th of 2024. So almost exactly 2 years ago to the date. You had a light CPI print, or which way did it go? Whatever. The CPI print came in, surprised the market.
Surprise. Yeah.
Yep.
It was a surprise. Yeah.
And then our rates moved. And then what happened was you had a backup in rates on our end. And all of a sudden you had this trade that was making sense, where you could go and use a free ATM, where you actually got paid to use the ATM in Japan and take that money and invest it basically in the Mag 7, which was playing out at the time. And then that unwound it. And I don't think that if the Japan carry trade unwinds more fully, I don't think we get caught with the pants down. We can't. Yeah. You can't watch.
You've got to see this coming.
Slow moving train wreck that's taking place right now.
Okay. All right. Well,
and by the way, if you feel differently there, certainly tell me.
No, I mean, it's all over the charts. I just ask myself at some point, like, what's the point? Like, are we just literally kicking the can down another 9 months? And what was 5 billion this time will have to be 15 billion next time. It's like,
I mean,
what are we doing?
To the same point we just made. Like, now this is countries. Don't get me wrong. It's not, SK Hynix and people being leveraged to SK Hynix and then being backstopped by it. But like, let the markets do what they're going to do at some point. And investors have to learn lessons. You can't behave badly and then expect the government intervention to step in and right the ship for you. And that's the same thing that's playing out. It's a much broader scale with the Japanese, yen and the carry trade that's been taking place there. But I also think it's more sophisticated investors that are involved there too. It's not mom and pops that are using an ATM that's all the way on the other side of the world to buy here. It's hedge funds and stuff. And hedge funds are smart enough to get out of the way of this.
Yeah. Well, most of them. Right.
Fair. Well, not all this was a hedge fund. We just saw situational awareness.
There's not all of them, but yeah, most of them will. So now for the question of the year, and I want to set this up before I get there. So one of the things that I think is going on right now, it actually goes to something you just said. I think Kevin Warsh is tired of Wall Street playing the Fed, right? What he called playing the referee. He thinks that Wall Street has an unfair advantage. They've been able to play the game and print money for too long. And he is doing everything he can to remove forward guidance, less meetings, canceling press conferences, not dot plot. And, that is going to have ramifications. I'm telling my audience that that means the 10-year and 30-year bonds is going to go higher because the risk premium is going to spread out. I'm also think the mortgage spreads will get wider because again, if you
The
don't know
banks
what's
know what
coming,
the hell they're talking. They don't know what
yeah,
they're looking at.
I mean, the only thing they can play with is risk. And, the market got used to, understanding the game via the referee's eyes for 25 years, right? Forward guidance, forward guidance, forward guidance. They were never surprised. Now they're going to be surprised. And I think that might come in September. So here's my question. And I want to know on a scale of 0 to 100 how crazy I am. So I believe that one of the Fed's only tools now for forward guidance is the vote. And we went from 12-0 to 9-3.
Mm-hmm.
I think what we're going to have in September, because I think inflation is going to get worse. So I'm calling that kind of leading into this. We're going to have inflation go up the next couple of months in the CPI readings. And I think we're going to have a 7-5 vote. And Warsh will be one of the 5. We have never, ever, ever had a rate increase where the Fed president is on the opposite side. So that is what I'm calling in September.
So you're saying 7, which is what I thought you were saying. 7 hike,
Yep.
5 hold.
And Warsh is one of the
being
5.
in the 5 hold.
Yeah.
Yeah.
So I really have 2 questions. So first, I think that's coming. But when I really play this out and I'm behind and I'm at one of those big tables with all these people and they count the votes and it comes 7-5, I'm not sure Kevin Warsh could go out to the media with a 7-5 vote when he's one of the 5. So he might be forced to make that vote 8-4.
Yeah.
But I'm going to call it right now. 7-5 rates are going up and Kevin Warsh doesn't want them. How asinine is that idea?
No. If inflation moves the direction that you're talking about.
Yeah, that's the first step. Yes.
So they can't continue to say now it's 58 months of us not being in the directional move of our 2% targets. You can't keep saying it unless you're going to do something. You can't.
Yeah. And we already have 3. We only need 4 more. And there's plenty of Fed presidents that are like Williams this morning said, hey, my expectation is for inflation to fall in the second half. And again, if it doesn't the next 2 months, you're kind of stuck, aren't you? You've got to raise at some point.
You do. And I can't decide whether Kevin Warsh is incredibly qualified for the job or not qualified for the job.
Yeah, it's kind of binary at this point.
I cannot figure out what the F is going on. And it's not very clear to me. I love what he's done with the task force.
You know what? I want to push back just to because I think it's all theater. I think this guy came in with a Post-it note saying these are the 5 things I want to do, and he's like, how can I make that happen? He's like, oh, let's go get some task forces, but they're all going to come back with my answers. He's like, what I imagine is he has an envelope that's sealed, and he's like, I'm going to write down what they're going to say, and then like 5 months later we'll get the answers, and he pulls out the card. Look, I'm right. I'm a magician.
Well, if you take that cynical view of it, I agree with you. If you take the view of I'm bringing in industry experts to help guide my opinion, then I love it. There are real question marks out there, like Andreessen. Andreessen's donated $25 million in the last year to things that are, when I say donated, he has contributed politically $25 million to things that will perpetuate AI further into the future. Mm-hmm. And it's like, can you look at that and now say that this task force doesn't have a conflict of interest? And so like there are definitely question marks outstanding there. I do think that Marc Andreessen is an incredible talent. And I think that if he is doing what is believed by him to be the right thing without conflict of interest, I think he's the right person to be there.
Yeah, just be clear. I met him. I actually know Andreessen. I haven't talked to him in decades, but I worked with him closely at HP because we bought his company. And the first thing I'll say about him is, you guys think he talks fast today? Whew. He was up an octave before. He just talks so fast. But I do think he is. I think he's doing it for the right reasons. But again, I am cynical of Warsh. I think Andreessen came to this because he thought he had a real ability to change things. But again, I'm telling you, Warsh wrote down the answers in an envelope. It is sealed, and he's going to pull off a magician's trick by telling you the 5 answers. It's all just a fucking game.
So what is your take on Warsh? Because I'm interested because
So here's my take.
Yeah, go.
So here's my take. I think Kevin Warsh, again, I've studied this for so long. Let's go back to Kevin Warsh first go around with the Fed, right? He wasn't the chair, but he was one of the Fed presidents. And he left. He quit in protest.
Yep.
Because he didn't want the money printer to go again.
Yep.
Let's not forget that, because I think a lot of people have forgotten that.
Yep.
So what does he really think of the money printer? He thinks the money printer has helped Wall Street get rich, the top of the K get rich, and mom and dad have been crushed.
He's not wrong. Let's be clear on that.
Again, that's where this whole thing starts. And I think Kevin Warsh has been creating this plan on how to, change the rules so that Wall Street is not so, that hasn't figured out the game, and maybe mom and dad have a fighting chance.
But I'm not sure what the end goal of this black box, Pandora's box that you can't see inside. I don't understand the goal of it, because what it's doing is it's costing us all tax dollars at the end of the day, because you have the interest rate premium blowing out on the long end bonds, which we have to pay. And so,
but also the savings rates, mom and dad savings rates go up, theoretically. So again, I think this is
no, because the savings rates are tied to the front end, and what we have is this steepening yield curve right now, where the back end's moving higher. So all of a sudden, you have mortgages becoming more expensive based on the 10-year moving higher, the
small business loans, credit cards, auto loans,
but the savings accounts on the front end, that's
true.
They haven't seen that move higher. So I just cannot. I cannot figure out why you're trying to cause confusion. I really don't. I don't understand it.
No, and again, I'm telling you what I think he's doing, and I can't tell you why. Because again, I think you're right, and I'm telling you, I just told people this morning, this is going to cause an accident. The accident is coming.
You have a 30-year treasury right now that's higher than it was the highest
19 years ago.
Correct.
19.
Correct. Like, is there anything productive that comes from that? No.
And you got a country that's $41 billion in debt. Let's not forget that.
Yeah.
That only gets worse.
It's, behind Social Security, it's the number one expense we have is debt financing. Right? I mean, it's just, and it's getting away from us. And I don't understand what the theory.
How long can he go? How long can he go without giving guidance? Because something is going to break.
Well, think about this. So, there's no benefit coming from this. What I mean by that is, if he comes out and says, I'm going to raise interest rates, raising interest rates should control inflation. Inflation is what drives the back end of the yield curve. So if we think inflation's coming down, or it's going to come down based on higher interest rates, that's going to suppress the 30-year treasury rate. What he's doing right now is, not only is he not controlling the 30-year treasury rate and inflation, but he's causing confusion, which is costing us more money, because the 30-year treasury is going up because the market says, I have no idea what the hell is going on here.
Yeah. Again, I've told my audience that I expect mortgage rates to have a 7 handle by the end of the month, which is not good, right?
It's not good. It's fucking terrible.
Yeah. It's just, and then business loans will go higher. Credit cards are going to go higher. He keeps going. The accident could be a recession.
It could be. It will be if this.
Yeah,
you can't have runaway interest rates, because people can't afford to finance things at that point. And so all of a sudden, that debt financing, and we're seeing, so it's coming in twofold. It's not coming just from the confusion that's taking place on that side, but you also have now the hyperscalers and things like that, where their debt financing costs are going up as well. Yeah. And that all of a sudden,
negative free cash flow. Yeah.
You couple those two together, and people start to want to take on debt a lot less. And then the downtrend of where that debt gets spent starts to dissolve. And then businesses start to have less productivity, less revenue, less all the things. There's nothing good coming out of what he's doing right now.
There's going to be an accident coming. The question is,
I think you've already started to see the accident playing out in front of us. And now what does he do? He goes back. He has to come in and raise rates, right?
Yeah. That's because, again, I go back to just playing the chessboard, right? So my belief is Kevin Warsh gave President Trump a pinky swear that he would not raise rates. But of course, he's only talking about the federal funds rate. What Kevin has done is he's not, again, to date, he has not raised the funds rate. He is not.
Correct.
But if you look at the 10-year note from the day he took office to where it is today, it's up like 37 basis points, which is a Fed rate increase, more than a Fed rate increase.
Correct.
So I think he's walking around going, yeah, I got him fooled, but I'm doing what I want to do. So,
well, if he doesn't now move in September, what happens to the long rates?
they're going higher, dude.
They're going
higher.
higher. We're putting ourselves in a corner right now. It's like raise rates. Yes, the front end moves higher a little bit. I mean, the market's already got a price, so whatever.
It's already priced in. Yeah.
It's not going to move higher.
What
you're going to do is you should compress and we're like nerd talk squared right now, but it should compress the back end of the curve.
But here's the problem. If he raises rates, but he doesn't give guidance for the next meeting, it doesn't matter. It's the guidance that was it's how this thing kind of played, right? We've had some form of guidance for 25 or 30 years.
Well, he can't pivot on that.
No,
and again, it's been his calling card.
That's his stick. Yeah.
Yeah.
This is it'll be interesting if the market. What I told people that I think is coming is and again, it's in August because this will happen quickly. Much like this $45 billion fund, it'll happen. It happens slowly and then all at once. I suspect the bond vigilantes are going to have enough of this nonsense, and they're going to rip rates higher, and it's going to force him to react. Right?
I just wonder.
10 of the 11 Fed presidents have been tested. This will be his test.
I just wonder, is there more to come? Meaning, have the bond vigilantes already had their
there's got to be no. It has been, in my opinion, too orderly at this point.
It has been orderly. It's just been a walk higher. You're not wrong there.
It will be one of those parabolic green candles or whatever you guys.
And by the way, that's going to crush bonds, but equities are not going to have a walk in the park when that happens.
No, and where I play, it is going to crush commercial real estate. Commercial real estate right now has something like $1 trillion in debt refinancing, and probably another $1 trillion of extend and pretend nonsense.
Yeah,
you get these rates ripping higher, and banks are going to start foreclosing in mass. That is going to be a train wreck and a half.
And our frozen housing market, not commercial, residential, is just going to remain frozen.
It's a depression. And I've said that for 3 years. It's a depression. 4 million transactions in a market. We usually do 6. That's not good.
So let me spin it back to you, because I'm
Sure.
trying to give some benefit of a doubt somewhere, but I'm starting to struggle to grasp at those straws. What is the game that he's playing? What is the end goal of these actions? Him obviously being washed, that I'm asking about.
I mean, the one thing I ask, and I don't have an answer, so this is right now is a question without an answer, in my opinion, is does Kevin Warsh want to reset asset prices lower? Like, is that the game he's playing?
Are we just trying to blow shit up? Is that what's going on?
No, again, if you look at what happened during the pandemic, the last 4 years, Kevin Warsh might say this is because we printed money the second time. Remember, he revolted the first time we did this. Now we've done it a second time because of the pandemic.
Is the long game the iteration of this? If I blow up the top end of the K, which is kind of what you're suggesting, then therefore there's not enough money to chase around assets. Therefore, inflation falls and the bottom end of the K has their head above water for the first time. I mean, that is a terrible. Like, I'm not saying you're wrong.
You want to talk about a recession? Woo!
Yeah. Like, let's take all the lubrication out of the system that allows the trickle down to that.
That's. I mean, when I look at the game and I ask myself, is because again, if he wants to blow up asset prices, he's doing a pretty good job of it eventually.
Well, he's also like this Phantom of the Opera where you can't see him, you can't hear him, you have no idea.
He's canceling the press conference now, so you can't even ask him questions.
So I mean, he could be doing whatever the hell he wants to back there, and he's. But at some point, the other Fed members, and this was to your point before.
This is why 7.5 comes in September.
Yeah, and
this is exactly why.
That's why you need to have someone start to step up and say, like, "Hey, I'm not entirely sure what your thesis of being so guarded and not telling us at all. Like, what are they looking at? Strip down core? Like, what is that?
That's the one that pisses me off. I don't give a shit if you tell me that PC is horrible, but tell me what the number, like, tell me what the measurement is.
Right.
Yeah. And he's not even doing that.
No, he's not at all. And it's strip, trim, whatever, like, there's 92 acronyms that they're putting. Blah, blah, blah. Yeah. So I don't know. This is, I hope that Jackson Hole, I hope that Jackson Hole comes along with some at least a shot. Listen, he doesn't want to give forward guidance. So we're not getting that, but at least some understanding of what the heck it is that his end goal is here, because it's very unclear to everybody in the market.
Well, again, let me take my unanswered question and throw it back at you. Could Kevin just be saying the K-shaped economy has gone on too long? I want to take care of the 80%. I mean, could that be
tax the top instead? That's a better thesis than, I mean, I'm not saying that I want the top end tax. Don't get me wrong. I'm a small government guy, but like blow up the top like that. It's better to just take the money from the top and give it to the bottom than it is to just blow up the top. Like, that's ridiculous.
Yeah. Well, I didn't plan to do this, but I'm feeling spicy this morning. It looks like Mayor Mamdani is going to roll out these grocery stores with prices 30% below. And the most thing that just happened this morning, or at least I saw it this morning, so it means it probably happened yesterday. He's going to require an ID to go to the grocery store, but not vote. How does that make sense?
This is, to your point before, when things get stressed to an extreme, which is where things are going right now with the K-shaped economy, where I'm not being unforgiving. I understand that people on the low end are struggling. I understand prices have gotten away from them. And I understand that it's not necessarily pretty if you're not a privileged individual at this juncture. But it does create lunacy. And what's playing out right now in New York City is lunacy. Between, again, don't tell us who you are and vote, but we need to know who you are when you go to the gas station or a grocery store in order to purchase these discounted, government subsidized groceries.
Yeah, I thought it's funny because a couple of days ago on my daily financial news, I'm like, hey, these grocery stores are going to be great. They're going to be celebrated. They're going to show long lines. Everybody's going to be smiling and happy. They're going to look amazing on Instagram.
Politically.
Oh, they're going to look amazing. But I actually pontificated that, people from New Jersey and whatnot would come. Because again, who wouldn't drive, 30 miles to get 30% off? Because I assumed they wouldn't do IDs because IDs are racist. But this morning I've learned that apparently IDs aren't racist if you want to buy groceries, which I am having a tough time understanding.
And these are, I'm not, I live in this state, which is crazy that you're more aware of it than I am, but this is just for New York City residents.
Correct. Well, yeah. Well, apparently this morning they're going to have to do IDs at the check-in, so only New Yorkers could come. So that, again, I assumed that wasn't, because Mamdani said that IDs are racist. So I assumed he wouldn't require IDs to go to the grocery store, but I'm apparently wrong.
Half of New Yorkers too, and I guess these, maybe the argument here is these aren't the people that need it. Half the New Yorkers are imports from Ohio and Iowa and California and Texas. They don't even change their ID when they get here. So it's like, but maybe those are the higher end of the K that aren't necessarily reflective of who needs this.
Yeah, but I was surprised that an ID, I can't understand why you need an ID to grocery store. You need an ID to shovel snow in New York, but you don't need an ID to vote. I mean, I don't get it. That's just crazy.
Shoveling snow, that's a damn crime.
There you go. Well, this is always fun. We take lots of twists and turns. Again, oh, wait, you never answered my question. How crazy am I to think we might get a 7-5 vote in September with the Fed raising and Warsh is one of the fives? Is that a 0% possibility?
I just think that if that's the case, then Warsh is getting bullied and he flips. So I think you are crazy to say that, but I think the logic that gets you to him flipping is not crazy at all. That's what the numbers warrant.
Yeah. So just to be clear, because I think you're right. If in the room the vote comes back 7-5, he will flip his vote, so it's 8-4.
And God forbid if that information leaks. Oh my God!
It will leak. Somebody's going to say something somewhere. Yeah, that's going to be crazy. Well, Taylor, you're always fun. Where can people find? Oh, and by the way, you put out an amazing 60-second clip this morning about situational awareness that people need to follow. I don't know how you get 5 minutes inside 60 seconds, but it's well done. Where can they find you?
You're the best. You're the best. Find us on Instagram is the easiest place. TikTok also works. We're at Life Goal Investments.
Thank you.
Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
The information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.